what's up? Red Panda Anthem. Red Panda, what's good?
But why was today on this negative CPI print today? That's the question.
Okay, so here's the question. Look at the VIX and why it's down. You ask the question, why is the VIX down when in theory you would think it would go up, because if it's a fear indicator, it should go up. And the VIX measures events 30 days out and probabilities. It's literally an indicator of puts and calls for the near term S&P 30 days out exactly. There are 3 events that matter in the next 30 days. The CPI, the November 2nd Fed meeting, and then the election. All of a sudden, right now, we got 2 of these data points probably taken out. We now know what the CPI is, and we now all know that the Fed's going to do 75 basis points. 2 of the 3 data points have been taken out. Therefore, a lot of people would cover positions believing now that they have a reasonable expectation of what's going to go on. Now, the numbers are very unusually high. It is very odd for the VIX to stay over 30. 32 implies this rule, divide by 16 to get the daily moves in the VIX?
But no, give it to us, to the audience.
There's a simple rule. The VIX is designed to tell you what do people expect the S&P 500 to move on a yearly basis in the next year. On a monthly basis, 30 days. But if you want to know what's the daily swing, you divide by 16, and there's some reasons for that. But the VIX at 32 implies that the market is expecting a 2% move on a daily basis for the next 30 days. That is extraordinarily high volatility, and you really need to have a lot of stuff go bad for it to move that much in the next 30 days on a daily basis. So all of a sudden, we got 2 of the 3 most important data points. Remember, it's just 30 days out. That's all the VIX measures. And now you have these 2 out of these 3 data points, and they already know. So they reduced the probability of weird outside events coming down. They covered some positions. Some people are in cash, so they need less protection overall. So that's how you get to that point. All of a sudden, you get some people just covering shorts, and the market changes.
So
now, does that mean, by the way, does that mean that suddenly we're out of the woods? It doesn't. That's the problem. It doesn't. 20 days from now, we could have people going crazy and buying more puts again.
We're always in the woods.
Well, this is why I say, everybody says, okay, so now we're out of the woods. You just explained away the problem. No, we're not.
In other words, it would have bounced eventually, but why was today on this negative CPI print?
So last Thursday, the CPI report came through and crushed your buildings like Snoop did in New York. Shout out to everybody in Jersey, New York. Don't do nothing to my trailer. I love y'all. Shout out to the good guys at DFD. I saw a post and it broke down what the actual numbers were in the CPI report. So over the past year, electricity has went up 15.5%. Food has went up 13%. Gasoline has went up 18%. So just on, if you take a person out on a date, pick them up, and then you bring them back to the crib, there's been a tax on your love life. Another reason y'all need to learn how to trade. Shelter went up 6.8%. Transportation went up 14.6%, and utilities went up 13.1% as a result. I want you to put in chat, what are the 8 revenue streams that you're going to have in your business or your personal life to offset these kind of inflationary pressures? Of course, number 1, long-term. Number 2, swing trading. Number 3, day trading or intraday investing are key. But what are the asset classes that you're going to invest in every month, every year, every decade that will give you a once-in-a-lifetime opportunity to be able to make money regardless of what happens? I told you about the country where inflation went up almost 200%. I don't think that will happen in America, but I would not be surprised if in 4 years inflation overall has went up 40%. So some of you were asking me this weekend, what is CPI? So CPI is the Consumer Price Index. Going back to that word index. Whenever you hear that term, I just want you to think of a basket or compilation of things put together and you get a price on it, okay? So it's a measure of the average change over time and the prices paid by people. I want you to think of it that way. And the report had an impact. But remember, in the sniper program, I told you guys, I always want you to focus on the direction of the market. So let's go look at the movement of the market on last week, Thursday. So this is Thursday. This is S&P 500. The yellow candles, of course, are down. The positive candles or upside candles are white. So we can see here we had an aggressive push down here. This is a 1-hour chart. And once again, only use even time frames. That will give you the best result in the market. So we had a violent drop. We came here. If we look at this line here, And I'll explain part of the reasons why. I know Dom had asked me why, and I got all the data back, and I'll break down the 7 to 8 reasons why we fell apart. But this line here is the 50% retracement of the 5-year. So imagine in any business, let's say there was a construction business that was doing $20 million a year, and the valuation of it got cut in half within 8 months. Is 50% off a great deal at that time or not? Historically, yes. So it almost touched this line, which is a huge buy signal for institutions, hedge funds, etc. And then we started to shoot up. Key lesson number 2. The market is going to push back to its previous highs. So when everyone saw that this was a buying opportunity and we had a huge drop, we started to push to the upside. So for my traders, I would have placed my target here at the top. And if, let's say, you were doing double targets, because I know some of you do that, and I don't recommend doing that, you can place it halfway from the high. But I would have placed my target at the top of this previous high right here and ride it out. Now, once you go up, let's say you got in at 3507, once it got to like 3600, I would have locked in profit, went outside, walked away. The more you're willing to walk away and the longer you'll let your trades breathe, the more money you will end up making. And the truth is, you need to give your trades about an hour at least to manifest and to hit your biggest target. Everybody put your cash apps in. Everybody put your cash apps in. And I want you to put in chat, if I am not willing to let my trade run for 1 to 4 hours, I am choosing to be broke. If I do not let my trade run for 1 to 4 hours, I am choosing to be broke. And I know you guys don't want that. So let's break down why the market went down violently and then as a result shot up. So number 1, anytime reports are there, I don't want you to practice, I don't want you to live trade any reports. So natural gas, crude report, housing data, CPI, non-farm payroll. But I do want you to practice those. Dream Team, Red Panda Dream Team. I want you to practice those. Shout out P. Dom, Ty, Brand, Mac, Drew, love you. Caleb, Marcus. Cannot wait to get back into the dungeon, which you guys started next month. But you have to, Ruben, what up? Jerry, what up? I want you to practice trading those reports because that kind of volatility can give you some amazing insight and practice for when the market is in turmoil on the long-term side. Number 2, once again, that 3,500 was a key bullish level. So if you look right here, I have it marked off. Over the last 5 years, this is where the market cuts in half. This key level right here. So this is literally the 50% mark off from 5 years. So if I go from high to low on the mathematical calculation, this is where 50% off is at. And number 2, there was a lot of stop hunting and put hunting. Now, of course, we have more puts in the market than we had previously in the last 4 or 5 years. There was some put hunting that happened there. There was a lot of short covering as a result. So if we break this chart down, and I'm looking at a lower time frame, once we hit 3502, you can see back here that the market had a huge drop, and it went from 3644 down to 3515. This was inside of 2 minutes. And then when the market opened, we began to shoot up to the upside. Number 3, you have to learn to stick to your primary targets, your big targets, and do not deviate from them. Because the one day it seems that you choose not to use your big target, you're going to miss out on the move that can change your life. So let's say if you were using the target I'd given of 523 points and you were trading the Dow, and let's say you were doing 29 contracts. So you would take 29 times 523 times 5. That's $75,835 that you missed out on as a result of not using your big target. Now, let me ask you a question. It's missing out on 75,000. I know you guys have to love this amazing handwriting. $75,835 in one day. Is that worth missing out on as a result for not using that big target every single day? I don't think that it is. Please put in chat, I will use my big target for the next decade when trading the reports. And the truth is, the final reason, there's a lot of short-term money in the market. So now there are not a lot of people that are looking to hold for long periods of time. You have to adjust. So when there's zero interest rates, that's the time to hold into the market. And I told you guys previously, and that's why I say watch every episode, because there are gems that I drop even inside of the rants, right, where I'm giving you information that is key. So I said if inflation goes above 15%, that's when you will start to have decay in a 2-tech 2 index strategy. In a zero interest or low interest rate environment, it will go, it would be a lot easier. Now, if we get above 15% interest rates, the 2-tech 2 index model does work. You just have to buy at the best areas, and 50% off is one of the areas that I've talked about historically before. And look at this. For those of you that trade options, if you had $2,000 in call options on that Thursday, you could have turned that into $1 million. 4 or 5 times a year, you're going to have a chance to hit a life-changing amount of money in the marketplace. And I know as you're trading and you're taking losses, it's not fun. It is heartbreaking, and it feels like you are wasting your time. And I know even your family may tell you, hey, you're killing time, you're wasting time. But the truth is, if you wait for the right prices to get into the market, you can hit a huge home run. What's the number one thing that I can do for you going into 2023 that will allow you to hold your targets longer so I can help make you rich? Do you need me to call out the prices for you for trades? Do you need me to be on a Zoom with you and call it out? Do you need me to build the algorithm to take them for you? Do you need for us to be in person and do it? Let me know. Because the truth is, if you're able to hit some of these moves, and these are the moves, like, so in August 24, 2015, remember when I told you guys to go study that session last year and earlier this year to get you prepared for what was going to happen this year? How many of you went to go study it? But when you're able to pull off trades like that in 2015, and the night of the Trump election, when he won, when he was not supposed to win, hypothetically, and it turned the market upside down, and the Mexican peso flipped down, and NASDAQ and Dow flipped down, when you're able to make a lot of money on those days, and I can't believe that's been 6 years ago, those moves allow you to be able to easily hit big targets in a very condensed or choppy market. And when we have a breakout move like we did Thursday, it will allow you to make a whole bunch of money, and it will prepare you in advance for these kind of gains. Please put in chat, I am worthy of hitting $20,000 days and $100,000 days in the market, and I will prepare myself for these kind of victories. I deserve to hit $20,000 days and $100,000 days in the market. And I deserve these kind of victories.
This that Red Panda Anthem. Ian, what's up? This that Red Panda Anthem. Red Panda, what's good? Red Panda Anthem. Whole clip going up. I know they can't stand it.